Welcome Jennam Sarena. In this video, let us study what is a mutual fund. Before studying about mutual funds, let us understand what happens if the investors are investing individually. Suppose there are 5 investors A, B, C, D and E. They are investing in the shares of different companies. A is investing in the shares of company X, B is investing in the shares of company Y, C is investing in the shares of company Z, D is investing in the shares of company P, and E is investing in the shares of company Q. The reason behind all investments are earning return. Let us see what happens to them. A is earning high return, but B is earning only a low return. And at the same time, C, D and E are incurring loss. This may not be the situation always. It may be like this also. In this case, A, B and D are incurring loss while C and E are earning high returns. This situation may also change. So it happens because A, B, C and D, E all are individual investors. They are not professional fund managers. They are investing in the shares of any company without any strategic planning. They are not professionals in fund management. So we need the help of fund managers or professional fund managers to help us in investment. That is what the mutual funds do for the investors. And now let us see what happens when these investors approach mutual fund instead of investing individually. The same A, B, C, D and E, the 5 investors, they are approaching the mutual fund. What is a mutual fund? Actually, it is a trust that collects money from a number of investors who share a common investment objective. Then the mutual fund invests the money in equity shares, debentures, bonds, money market instruments, and even other securities. Each investor owns units, that is, A, B, C, D, and E owns units of mutual funds. It is same as shares of companies. Shares of companies and units of mutual fund are similar. A portion of the holdings of the fund, the income or the gain generated from this collective investment is distributed proportionately among the investors after deducting certain expenses. So, a mutual fund is one of the most viable investment options for the common man as it offers an opportunity to invest in a diversified, professionally managed basket of securities at a relatively low cost. So, they are investing in diversified securities. Mutual funds invest in shares, debentures, bonds, and many other securities also. Similarly, they're also investing in different sectors like IT sector, petrochemical industry, banking industry, insurance, telecommunication sector, pharmaceuticals, FMCGs, and other industries also. So, the benefit of this diversified investment is that even if there is loss in a particular industry or a particular sector, the mutual fund can make gain out of the profit in the other segments or in the other industries. That is how mutual fund protects the fund invested in it by the investors. So they are professionally managing the fund invested with them. And now let us see the operation of mutual fund. A mutual fund is an investment vehicle for the investors who pool their savings for investing in diversified portfolio of securities. They are aiming attractive yields and appreciation in their value. So they pool their money in the mutual fund. They invest in the units of the mutual fund. And what the mutual fund is doing is they are professionally managing the fund invested in them. So, mutual fund is a financial service organization that receives money from shareholders and they invest it. They prefer investment in different types of securities, long term, medium term, as well as short term, and in different sectors, different types of industries, and they earn interest or returns on it. That is, their investment generates returns and they make attempts to make it grow and they pay the shareholder cash on demand for the current value of the investment. So this return is paid back to the investors. This is how a mutual fund operates. The mutual fund is a special type of institution or it is a trust or an investment company that acts as an investment intermediary. They channelize the savings of a large number of people to the corporate securities in such a way that investors get steady returns, capital appreciation at low risk. Next, let us see what is the definition given to mutual fund by the SEBI or Securities Exchange Board of India. SEBI defines mutual fund as a fund established in the form of a trust to raise money through the sale of units to the public or a section of the public under one or more schemes for investing in securities including money market instruments. And there are a number of mutual funds to suit the needs and preferences of investors. The choice of fund is linked to the demand of the investor. Does he expect a stable, low earning, or risky, high earnings, or capital appreciation, etc.? On the basis of this, the investor can choose the required type of fund. The objective of earning helps in deciding the type of funds where the investment is made. The various mutual funds can be classified under five broad categories according to ownership, according to scheme of operation, according to location, according to portfolio, and other classifications are also possible. Let us see how we can classify mutual funds based on these things. On the basis of ownership, the mutual funds are classified into two as public sector mutual funds and private sector mutual funds. On the basis of scheme of operation, the mutual funds are classified as open-ended funds, closed-ended funds, and interval funds. On the basis of location, we can classify the mutual funds as domestic mutual funds and offshore mutual funds. And on the basis of portfolio, the mutual funds can be classified into different types like income funds, growth funds, balanced funds, equity funds, bond funds, specialized funds, leverage funds, taxation funds, and money market mutual funds. And some other types of funds are also available like loan funds, non-loan funds, hub and spoke funds, etc. So a variety of schemes or funds are available under the mutual funds for investment by the investors. So that is how a mutual fund operates. Hope you have got a basic idea regarding what is a mutual fund. Thank you for watching this video. For more videos, subscribe the channel.